Like this drop has not been an outlier, or it's been similar to the previous two major drops as far as like the magnitude and the percentage. The difference is it's happened in a shorter period of time.
You know, again, you can look at the historical trends, but you see how wide the variability is. And we've had Novembers and Octobers in probably 3 or 4 years in the past where it's trended pretty poorly and it's gone red.
Because there's so many people that have sold right now that are waiting for like 70,000, 50,000, even less. And all those people are going to want to get back in because they don't want to miss the move to $1 million.
I believe that the 4-year cycle never existed to begin with. Guys, welcome back to another show. It's Wednesday and Bitcoin is moving. So I'm here with Plan C and Smithy. Plan C, how are you doing today?
Hey guys, doing decent, doing well. I mean, everyone wants to know, what's going to happen here with Bitcoin. We'll definitely cover it in detail, at least our thoughts. But no, I'm doing well.
Smithy, how about you?
I'm still alive, still breathing. I'm awake. I'm caffeinated. I'm moisturized, and I'm ready to start the day.
Likewise, fantastic. Let's go. So then, if you remember, I had a trading channel here. By the way, guys, just a reminder, none of us are trading and we don't recommend any trading platforms, but it's fun to watch the price action, especially when there is a big movement like the one we've seen in the past few days. And now is literally do or die because the 89 we've seen, it's basically the bottom of the channel. So that means if we do break this, then it's going to be interesting. So I'm not saying it will. For now, it looks like we are bouncing back, but Bitcoin is definitely touching the bottom of the channel. I don't know what you guys are thinking, but it's definitely one to check every now and then to give us a sense of what we could see coming up.
Yeah, I mean, the thing is you can draw like these different types of channels or kind of like a range we're trading within, different ways to slice it, right? But I mean, technically, this is a channel. Like, there's two touches on both sides. So I mean, those levels, like, they have been respected. So it is technically correct. It's a channel, right? This trend could definitely break, and we're not necessarily doomed, of course. But it is an interesting channel that we've been observing, and with a lot of this stuff, it's just data points. So it's like, okay, we have this amount of data points, kind of showing this, and so yeah, we definitely don't hang our hat on one specific thing, but this is something we have been tracking, and the way you've drawn it there, I think, makes sense. And so yeah, we are at kind of it's showing we're at an important level, and it's not just this channel that's showing that. I mean, you can look at that in many ways that we're at an important level. So yeah, I'd be interested to see if we do bounce here. If we do bounce here, then that'll add a lot more credence to this channel, and we'll continue to track it for sure. So we'll see where we're at next week, I guess.
NFA, no trading allowed. I agree with everything Plan C said. I think I've been looking at this and staring at this a lot. I know you guys have too, and it's great to track. I think people mistake, especially when you're putting out public work and maybe even some technical analysis. There's so much technical analysis out there that I think that's basically like mostly reading tea leaves. But so when you see charts like this online, people are quick to assume that you're using it to try to trade or make predictions about short-term movements. I just think they're useful to track, to look at historical patterns to see how they differentiate. Not necessarily because you're going to be placing bets, but the things that stick out to me. First of all, we're widening the channel, right? But what's interesting is that this is not our first 25-30% drop. We've had a couple of those in the past couple of years. Around the same magnitude, right? Yes, it's a little bit, we didn't go quite as high, but I think what's worth taking away is that each time we've had one of those drops, it's then turned around after, a couple months or so, and then went up to a new all-time high every time. And so I'm working on analysis. It's not ready for showtime yet, but we're in a bit of a statistically unstable zone right now with this red drop down that we're in right now. And what it's going to do, I think, is that it's either going to shoot back up to another all-time high, or it's going to start dumping. And I think people think that's a really silly and empty statement, but there's something to that, right? Because that means we're getting another all-time high, or it means that we're going to have maybe a more prolonged bear session and we're all going to have to buckle up a little bit.
Guys, exciting news. December 8th and 9th, I will be attending the Bitcoin conference in Abu Dhabi. If you're coming, please stop me, say hello, let's connect in real life. In the box down below, you'll find a 10% voucher. Use it, get your ticket before it's too late. By the way, if you're enjoying my content, it will mean a lot if you could help me by subscribing to the channel and push the like button to support my journey. Thank you.
Like, this drop has not been an outlier, or it's been similar to the previous two major drops as far as like the magnitude and the percentage. The difference is it's happened in a shorter period of time. So less days
Yeah.
to get to the same level of a drop, right? So, and we also didn't go as high. So if we would have gone up higher and we would have dropped the same percentage over a longer period of time, this would feel less, scary for people, you could say, or people would be less dramatic about the current situation. But essentially, in a lot of ways, what you're saying is because of the severity and the short time where we dropped this much, it's looking like there's going to be. So you're basically saying, okay, yeah, we could go up or we could go down, but you're actually saying it differently. You're saying we're not going to go sideways, right? That's saying something. Or the probability is low that we're going to go sideways because the volatility has increased, right? Like we're traveling a lot of distance in a short period, and so it's looking like the volatility is increasing. We're probably not going to go sideways from here, and it's looking like we're going to have a quick V-shaped recovery, or we're going to break down and probably go quickly to the lows and then potentially have a V-shaped recovery from there. So either way, it could be a quick
Right.
recovery, but it could be a lot of short-term severe pain, or we could just completely rebound from here. So it can kind of go either way, but the whole point is volatility is coming, it seems.
That's a good way to put it, right? Is like over time, we're seeing a growth in actually smaller in percentage terms, smaller drawdowns from all-time highs. Because again, each of these times we've rebounded, we've made a new all-time high, right? And then we've had drawdowns from there. So you're actually statistically stacking smaller and smaller drawdowns than what we've had historically. Usually you're having a more significant drawdown to bring us down to, a bear market. So again, it's sort of an unstable zone.
Yeah, exactly. And I think this has to do with the fact that it's happening now. And I think many people are like, oh, the cycles are over, they are dumping. Someone was asking me how I feel, and I said, hey, my opinion has not changed. The mission is to have more Bitcoin today than yesterday. I don't care about any specific price, as I believe time in the market beats timing the market. Feeling blessed to be able to stack more sats, whether at 90 or 125. So that's what we are saying. Who cares about this? If your vision is long term, it's actually a blessing. But like you guys are saying, we've seen this happening so quick. And towards the end of a point where many people are perceiving that cycle is over, that is generated panic. In fact, the fear and greed is telling us that, people are in extreme fear. We've seen in the past long consolidation towards, the fact that we are at fear and greed at 10 doesn't mean it can't go any lower. And even if it does lower, we can stay there for a certain amount of time. But it's clear to me, at least, that everyone is in panic.
Yeah, I mean, the fear and greed is interesting to track just to kind of get an overall sentiment. I mean, for me, I combine the fear and greed with just the comment section and just being on X a lot. I kind of get a sense of the mood. So between just the types of posts people are making, the comments, and then the fear and greed, everything kind of combined, I get a pretty good sense of sentiment. And it does feel right. Like these fear and greed numbers do kind of correspond with what I'm seeing in comments and just overall sentiment on X, which I think is a pretty good to gauge sentiment. So, but the thing is, we can stay extended. We can stay at these high fear levels for a very long period of time. But it is noteworthy that the fear levels we're hitting are comparable to other levels we've hit, throughout this cycle. I do think this is the highest fear we've ever had this bull run. I think that's pretty obvious. I think a big part of that is related to the fact that the last two major corrections we had, where we just showed on the chart there, that we had 30% drawdowns or 25 or whatever they were, right? The fear, I think it was back in February or March, I want to say, where we went down to 75,000 from like 108 or whatever it was. The fear was not as high then because it didn't correspond with the end of the so-called 4-year cycle psychology, right? There's such a self-fulfilling prophecy with this 4-year cycle idea. I did highlight this on, multiple weeks ago. I said, I think there's going to be a major headwind towards the end of this year where we're going to have to get through this 4-year cycle narrative. Now, because a lot of people are going to try to front run it. And that's exactly what we've seen. We've seen a lot of people, to a more extent than previous cycles, there was a lot of people that were like, I'm getting out in Q4 no matter what, whatever the price is. And that's what we've really seen. We've seen a lot of people selling that are just like, no, 4-year cycle still holds, I'm selling. And so that is what has caused, in a lot of ways, I think, us not to have the good October, November like a lot of people expected. And there's other factors. There's obviously, it's multiple factors. The reason why the fear is so high now is because you're combining a drawdown with the timing that a lot of people thought, okay, this could be the window where we could see a drawdown. And because we've seen a drawdown in that window, that's amplifying this fear, right? And so if it would have happened in like January or something, I think it would have just been another correction. But the fact that we didn't hit the targets to the upside, and the fact that we're in Q4 and we're seeing this kind of a drawdown, is making more people think, oh shoot, it's happening the exact same way it's happened the last few times. We're going into a bear market, right? And we could go into a bear market. I mean, my current probability, just for me, everyone's going to have their own. I'm about 80%. I think we will continue the bull run, but I at least 20%, if not 25% of me, if I'm being honest, is like, yeah, bear market could come from here. So it's not like I'm 100% bull run. There's definitely a decent part of me that's like, yeah, we could just kind of crash down and have a bit of a bear market here.
I think just to keep in mind for folks listening, neither of us, nor a lot of the people who do hardcore data analysis, especially the power law folks, we are not that confident in what's going to be happening in the near term, whether that's intra-month over the next few months. And so therefore, when we're looking at when we're sort of speculating what's going to happen next around the corner, we kind of try to make the best out of the data as what we possibly can. But I think you would agree, Plancy, we assign very little confidence as to which direction it's going to go and for how long, because it's inherently a regime of Bitcoin and really any other market that's just going to be not very predictable. So
yeah, short term, we're not I'm not a trader. Like, I don't trade short term. I mean, I think think the whole trading kind of culture on X, people need to understand, like, okay, you can be right sometimes, but people get like, oh, this guy was right about a major, like some people will make a lot of noise around a specific trade, and then they'll highlight it, and then they'll kind of be perceived as this amazing trader. But who knows all the trades that they, were unsuccessful on. So the point is, the majority of people that short-term trade, they lose money. I don't promote in any way trading Bitcoin. I think that's really stupid. The clear long-term trend is up. Like, why would, like, when we have things like the, power law and the quantile model, like, why would you even risk these short-term, trading? Just trading short-term, it just doesn't make sense. So you're kind of putting yourself in a position to fail. And I think the majority of people really are just completely guessing. Now, we love to look at patterns. We love to kind of look at these short-term things, but that doesn't mean we're promoting it. And that doesn't mean we have a clue where it's going short-term.
They're sort of data-informed, semi-educated guesses with very, very low confidence is the way I look at it in the very short time.
I have a funny quote that says, even a broken watch is right twice a day. I agree. Nobody knows, myself included. I have no clue. I have no idea what's happening. Matter of fact, if you would have asked me about this table a year ago, I would have said October, November are going to be green for sure. Because based on the data that I've seen so far, I'm confident to say, but that doesn't mean that I can predict the future, and I don't trade myself either. In fact, last night I bought the dip. I buy every month regardless. I don't care about 90,000, 70,000, 150,000, because I believe in 10 years we're gonna reach $1 million. So it's interesting just to watch, observe, and of course have an opinion, but that doesn't mean that whatever we are saying here should be used to go and leverage your house on the long. Yes. You know what I mean? That would be not wise to do. But look at this, man, November, minus almost 17%. That's interesting. I know you have some data, Smithy, on this. Maybe we can connect it too.
Yeah, I just remember thinking when I started tracking the monthly returns back in October, and it was supposed to be, Pumptober, Moontober, whatever they were calling it. And so, again, you can look at the historical trends, but you see how wide the variability is. And we've had Novembers and Octobers in probably 3 or 4 years in the past where it's trended pretty poorly and it's gone red. And not only that, but one month does not correlate to the performance of any other month or the following month. So, and I kind of showed some data there. So turns out we've got 2 underperforming months in a row. I know that institutions coming in have changed things significantly. We can talk about the business cycle and how it's, that's actually the cycle that's driving the Bitcoin cycles. And those don't have to be precisely periodic. And we've talked about that. So it's not, again, my faith in the long-term trajectory here is not really shaken. But yeah, it is funny how you can, even if you're not putting money to a bet by looking at historical months, you can kind of look at the trend from the past, as we'll see with my chart. And you can kind of say, okay, well, if I gun to my head, if I had to place a bet somewhere, I'd probably put it somewhere in this region. And of course, it just defies what your expectation was.
Plancy said earlier, and he said there's been a lot of people, they prepare the OG Bitcoiner to sell in Q4. So then if you are an institutions, you want to punish them because the majority of the people, they get punished in the market. So to me, it does make sense. So they came in and said, okay, well, a lot of people are going to expect Bitcoin to do A and B and C. So let's do X, Y, and Z and then take as much money as possible. I don't know, maybe I'm too conspiracy theorist here, but from a business perspective, it does make sense.
Yeah, I mean, it would be interesting to look at. I don't know. It'll be interesting to kind of assess where we're at by the end of this year, because you could almost look at the previous cycles and say it'd be interesting to do the same thing with like a drawdown from the all-time high, because we put in our all-time highs in November, December. So by the end of the year, you could say, okay, somehow you'd have to quantify like 30 days past historic all-time highs, or you could kind of say like, okay, are we on track? Are we dropping at the same rate we did in the previous cycles? You could quantify that with a cloud, right? You could say, okay, I know it's only a few data points. It's tricky, obviously. Maybe there's not enough data to do it. Maybe it's not useful, but just to kind of say like, okay, are we actually on track to kind of fall into a bear market, or are we holding up better than we have in the past? Like that'd be interesting in the coming months to kind of assess that, right? Anyways, we hope to get back to a period where we don't have to do that, where we're kind of like, okay, we're back, right? Because I do think it's like 100,000 is a massive psychological level. If we can just claw our way back over 100,000 by the end of the year, or even, within the next month, like that would be a huge win. And then from there, we get over 110, right? I know it's a lot to say right now because we're sitting in the low 90s, but get over 110, it's like we're pretty much back on track at that point. And then what happens is we kind of have that shift where everyone's like, okay, all these people that have sold, right? Because there's so many people that have sold right now that are waiting for like 70,000, 50,000, even less. And all those people are going to want to get back in because they don't want to miss the move to $1 million. I mean, there's some people that took lifestyle chips off the table. Those are the OGs more, but there's a lot of people that tried to trade the cycle. There's a surprising amount of people. And so we're definitely on the lower end of the deviation. We've been lower at than even here.
We have been lower. We've been exactly 3 years in the past. We've had worse performing Novembers as of the 19th of November. Just like what Mauricio, your tabular chart was showing, where, this is showing closer to 17%, but 16, 17% under is about where we're sitting. Yeah, you got 16.32. It might be a slight difference in data source or daily versus hourly, whatever, but it's doesn't really matter in the grand scheme of things. Right now, historically, again, history doesn't always repeat itself exactly. It should be like around 6 or 7% in the green today. So we're having a classic bad November kind of year, just like November was. Whether the median by the end of the month is supposed to be positive 7%, there's nothing magical about that being a magnet pulling it up. That's just kind of showing. You can see the spread there. That cloud the cloud itself is the interquartile range. So that's the bottom edge of the cloud is the 25th percentile up to the 75th percentile on the top. So the median is smack in the middle. So that's a pretty wide range, right? So and even if we come back into that cloud, we can have a net negative return technically for the year. So a lot of things can happen. This is not anything to hang your hat on. In fact, the reason I post this first of all, I made a poll because October was performing so badly. I asked the audience, do you guys want me to keep updating this to track it or not? And most people said yes, like just keep doing the updates. So I said, okay, people want to see how unusual, how atypical of a year it is and how it's not unprecedented actually. So if anything, I hope it's giving folks who are maybe newer to Bitcoin and investing in Bitcoin, maybe it can give them some sense of like, okay, I should not be trading actually. Like these intra-month movements are not predictable. And we're seeing like, case in point, we saw October and now we're seeing November, the same thing. So
like has happened in the cycle before, everybody, myself included, I was expecting $100,000 Bitcoin. No question asked. Everybody was asking for it and everybody was 100% certain it would have happened. And then we topped at 69, let's call it 70 for the sake of the conversation. Now this time, everyone is like, okay, Q4 is going to be super bullish and it's bearish. So the market wants to punish the majority of the participants and it looks like it's succeeding, right? That's why holding and DCAing in, no financial advice, but for me, that's the best strategy because I don't honestly care about October and November. Like I said, it's fun. This is actually fantastic work and I love watching this, but I don't use this as a system or a strategy. Because this is how you get punished.
Well, just that we're confident on the longer term trend, right? So like the more midterm to long term trend, that's what we're confident on, and that trend is more statistical, mathematical, and that trend is over time. That's what we expect to see a mean reversion to. However, it is a big range of probabilities with that, or possibilities. And that's because Bitcoin has been historically had a high volatility. So when you have potential volatility around that pattern, right, we're confident on like the 5-10 year patterns, but there's volatility around it. And so there's a lot of potential outcomes. And in the short term, there's so many influences, right? And I think the last thing I'll add on this is simply that, we're seeing a lot of people posting TA, and the reason why TA to me should not be used in a vacuum, and the reason why I don't really put it that high on my kind of go-to list, is because you have to look at the context of the TA. If you just look at TA in a vacuum, people say, well, we're having this same pattern we had with Bitcoin, 8 years ago. Well, what was Bitcoin like 8 years ago? Completely different asset, completely different market cap, completely different players, completely different macro backdrop. So like you got to take into consideration all these other factors. And so TA is just one data point in a whole bunch of things you want to be looking at. And so, yeah, I think relying on just TA right now is super risky, because it is not the same cycle. And you've highlighted this with the business cycle, right? And where we're at, like there's clear deviations we've seen this cycle compared to previous ones. And so, yeah, I just think TA is a massive grain of salt. You should be taken with a massive grain of salt. And it is fun to look at levels and things. And there is psychology around it. Like it has some amount of value, but we really got to look at a holistic perspective and focus on kind of the longer term patterns. And that's what we'll be doing. But yeah, we'll look at more, like all this stuff is very interesting though, just to kind of track it and assess it. But again, we're not promoting trading, of course, with these sorts of models, these shorter term models.
Exactly. And the last thing I'll say is be careful who you listen to, because the majority of the people, they show you they are trading, they're making money. The revenue is not coming from the trading itself. It comes from affiliates, promotion, which is all fine. I'm not judging. I don't point finger. I don't care. We like to focus on the long term and then go in and look at the data, because it's fascinating. I love looking at the data. This work you do, Smithy, is unbelievable. And I'm amazed by this cloud and those averages. They are fantastic. But again, not to trade, right? Just to have a view on where these could go. But regardless, I mean, I'm buying. You said something similar as well, right? So I'm
buying, man. In fact, if this makes me want to buy more, right? If I'm down, I'm the third worst November ever, according to 16 past Novembers. This November, I want to buy even more. So.
You can see here just quickly on the ETF, there has been an absolute bloodbath. Chatting you off camera, looking at those numbers, saying, "Damn!" Like you can see. There's been a huge amount of outflows. No wonder why. The price, of course, corrected a little bit. So now the question is, what's going to happen next?
Yeah, what I get out of this is simply that ETFs, these kind of outflows and the price is going down, right? You could say, but it's also somewhat hanging in there. We're kind of somewhat stabilizing at different levels as we're going down. So there's clearly other buyers, right? It's not just ETFs that are supporting and propping up this whole market. There's clearly other people that are not in ETFs that are obviously buying. So it's interesting to track the ETFs flows, obviously week to week, but Bitcoin's liquidity is at a point where it can support this kind of sell pressure, at least to some degree. So yeah, we'll keep tracking it, but it's not overly concerning. Even though these numbers, they are high in terms of millions, if you look at them relative to how much, the total amount of ETF capital is, it's still a, kind of a small percentage, you could say. But yeah, so we'll kind of quantify it maybe a bit better around like percentages of sell. Like this week, okay, 1% of the ETF total ETF pile of capital was sold or something like that. But anyways, interesting stuff. So the whole idea around this was, I was thinking more and more like, okay, we went up to 126, right? And if you think about it, like, okay, previous cycles, we kind of went just below the previous all-time high, or we kind of bounced before the previous all-time high. So I know that around 70,000, 69,000, we put in so much price action below and above that level. I mean, if you think about it, so we could say like in the 2021 cycle, right? We went up to the high 60s or mid to high 60s twice, right? So we put in some price action at the beginning of 2021, kind of below 70,000, you could say, in the 60s. We put up quite a bit of price action there. Then we had a second run up and got rejected, right? At the second all-time high. But then this cycle, we spent a lot of time trying to break through that same level. We traded sideways there a lot. Then we got above it. Then we traded above that level quite a bit. So my point is, there's a ton of price action around the 70K to 75K level. There really is. And then we also went down at the beginning of this year from 108 or whatever it was down to the mid 70s. And then we had a huge bounce from there up to the all-time high. So my kind of main thesis here is like, okay, so if we do have like this sharp kind of correction, you could call it, or whatever you want to call it right now, down to the 70s, is this a bear market or is this a bull market correction? Like, how do we define this? If we only spend 1 to 3 months there, is that a bear market? Like definition wise, how do we define this? Because if we get down to say we trade sideways for 1 to 3 months between 75 and 100K, right? That's a 20 to 40% drawdown. We've had 20 to 40% drawdowns multiple times in bull markets. We've bounced back pretty quickly in 2017. But like, how do we define this? Like, is this a bear market or not? I mean, by the classical sense, it would be considered a bear market, but you got to also factor in duration. So anyways, I threw out this poll and it was completely split, right? People are basically like, this is a bear market. No, it's not. There's like over 6,000 votes. And there's quite a bit of like kind of comments and people kind of not like, it's interesting. There's some strong opinions on this.
I think something I've been thinking about, it just coincidentally with your post here, is like defining bear markets, needing to redefine bear markets. But absolutely with Bitcoin, the trend has been with the big cycle, the parabolic moves are followed by the bear markets, which are about taking the air out of the balloon at a similar rate, actually going back down for about a year until you kind of hit that support line. And then you just kind of go away for, a couple, 2 or 3 years until you start to creep up the parabolic move again. That's kind of been the history. It's just really hard for me to say. I just feel like we're teetering. I think we're teetering on this very kind of unstable edge, and we could either jump to the next level up. I know there's like liquidity levels there, or we could fall through the floor, and then it might be another rough year for a lot of people. But I don't think that necessarily means that the patterns can't change, because I think there are a lot of things that are different this cycle, Plan C. Like for example, I think we could keep trending down conceivably because of the business cycle. Like, we still have tariffs, we still have a lot of uncertainty geopolitically. We've got these things that could push us down and hold us down for another 6 months to 12 months. I don't know. But then it could start to run up again and get parabolic, and it could take us all the way to the 200, 300K. So I don't know which. I'm almost 50-50 at this point.
It's interesting. I have a very controversial opinion here. I believe that the Fourier cycle never existed to begin with, but then we have to put labels on things we don't understand, right? So we kind of created this story that in the beginning was easier to happen because the number of people and the amount of people, the type of people involved were allowing this to happen. But now, and I know it's very controversial and maybe I'm completely off, but I believe that this is going to change completely. And to be completely honest, it was never it to begin with. I don't think the Fourier cycles have ever existed. I think it's about liquidity, right? And we will see if everything goes according to what I'm seeing now. We will see a check of $2,000 to every American coming in the theater next to you. We will see the liquidity changing. The tariffs are going to get sorted out. The Feds are going to print money. So the whole thing is going to follow liquidity. I don't think it's about the Fourier cycle. Plus, the halving doesn't even have any impact anyway. The majority of the coins are in circulations anyway. Not even mentioning the type of investor now we have in the market. So are we saying then having BlackRock buying $70 billion of this doesn't have any impact? I mean, again, very controversial, but I believe that whatever happened so far has been labeled by us trying to make sense of it.
It's like we've been in Plato's cave looking at the shadows, not seeing what's, and
Exactly.
I 100% agree with you. And I think it should be a lot. I hope, given what we know now about the liquidity and the business cycles, I hope what you said becomes less controversial now. And I'm in 100% agreement with you.
I think we're trending in that direction. We're trending in a direction where people are starting to kind of open up their perspective around this idea of cycles. I think to hold this idea of binary, like bear bull only, I mean, it's essentially where Bitcoin is more just reacting to the environment it's in, right? It has multiple things happening, right? It has this kind of consistent, you could call it adoption growth, power law. That seems to be a very strong cycle or a very strong pattern. We've tracked the R squared on that. It's very high. So that's kind of like the underlying kind of long-term trend. And then on top of that, its movements around that are determined by the environment it's in and what's going on, all the external influences, right? Yeah, I kind of see it more that way as not like a binary thing, more like, okay, we're going to kind of have this more harder to define moves around this with less kind of predictability. I do really hope this idea of the Fourier cycle narrative breaks, and I think it's extremely healthy for Bitcoin long term, because think about it, if we want Bitcoin to be a global asset, that is kind of more of a store of value, where it's like, okay, it's a growth store of value asset, but it's a global asset, and we want it to be adopted by huge money players globally. it's not healthy to have this idea of like, okay, every 4 years, everyone just, it goes down 80%, or like these cycles, like everyone wants to sell every 4 years. Like that doesn't help the idea of holding this thing long term is what you want. Like you want this more of a narrative of like, S&P or gold, where it's just like set and forget it. This is it's part of my long-term portfolio. If it's viewed as a speculative, like this thing, people want to trade it every couple of years because there's some mythical cycle. It's not actually a good thing. People have to understand this is not a good narrative for Bitcoin. And right now it's just psychology. The psychology is the only thing holding this idea together, in my opinion. There's nothing to do with the halving that makes any logical sense. It's just a very strong narrative and a very strong psychological pull that is kind of Bitcoin is fighting against it. So I think it's an important time we're in, and I really hope that we break it. I really do. I agree with what Mauricio said. I don't think it's ever existed. I think it's been other factors that we haven't been able to understand or quantify. But once we do, I think that's actually very important, and that's a part. And we're seeing some of these posts go viral. There was I think his name's Julian. He put out a post yesterday that got 500,000 views. And so there's more awareness around this business cycle, this idea of, okay, there's other influences. On-chain wise, there's some interesting data. Like, I mean, you can look at it, different data points, of course. But this one shows, and this is short-term holders, right? So this is basically people that bought in the last 155 days. And this is assessing, I call it new investors. And this is like the pain they're in, right? Because this is a deviation below, or the ratio below their kind of cost basis. And where we're at right now is actually 83.5 currently. 0.82 was the low. And the low we got to on this recent drop below 90,000 was actually not anything more extreme than the previous two. So this is showing the three major corrections, right? The one that we had down to 75K at the beginning of the year, and then the other one that we had. And we're just completely in the same place. Like there's nothing, right? TA wise, we're below, right? We're below the 50-week SMA and EMA. So in other TA metrics, we're lower, but in some on-chain metrics, we're actually similar, which is interesting, right? It's just something to consider, right? This is short-term. From a strictly price standpoint, short-term investors are not necessarily, when you combine them all together, they're not necessarily in any more pain from an actual losses standpoint than they were in the other two previous drops. It's just more psychological pain, I think, in combination.
I like what you said in the beginning. I think this is due to the fact that people were expecting certain dates, or they were expecting Bitcoin to pump in certain times, meaning Q4 was supposed to be bullish, hence why the fear comes in. But if you zoom out and look at the asset class, which is, to my opinion, changing, I think a drawdown of this magnitude is perfectly fine. I mean, in 2017, we had a multiple time 40% plus correction, and we were still in the bull market. So overall, like I said, I'm blessed I can buy Bitcoin below 100,000, so I can't complain.
People that are here longer term, I mean, they're looking at this as a huge opportunity, as far as buying at these levels. It's a mixed bag though. Like signal wise, it's really a mixed bag. Like there's a lot of signals pointing to, we could, trend into a bear market from here, or you could call it, or have more capitulation, right? There's a lot of levels we've broken, specifically on the TA side, but it's a mixed bag. I mean, there's definitely a lot of metrics and things you could look at that are saying this is just a deep, kind of sharp correction as far as the amount of time to we've kind of dropped down here. So yeah, there are still signs that this could just be basically a correction within a bull market. I think there's and then you factor in macro. That's what pushes me over the edge. So for me, it's like, okay, signal wise, it's a mixed bag. Could go one way or the other. There's not like a strong signal pointing to like, okay, for sure this is a bear market from here, or for sure this is a bull market correction. But when you factor in kind of the overall context of where Bitcoin's at as far as the macro influences and all these other factors, that's to me, and then getting through this 4-year cycle kind of headwind, next year we'll get through that. That's what pushes me to think, we're going to continue on with the bull run. Plus, we never had like that full euphoric peak, and we never really hit the levels that I think most people expected. So those are all the reasons, anyways. And the fact that we traded over 100,000 for like almost a year, like we've really kind of shown that we've put in a lot of price action at that level, and I do think it'll be kind of a magnet to get us back over 100,000 because we've already proven, Bitcoin should kind of in a lot of ways be over that 100,000 level, just the amount of price action over that 100,000. So that's pretty much how I'm looking at it.
To me, what it tells me is that we're at another make or break kind of point. And so I think that these levels can have meaning in terms of what's going to have short term potentially, but again, I think if you zoom out and think of the macro conditions, yes, the government decided that they're going to reopen. That's really the only thing I think that's changed significantly in kind of recent months, macro wise, or I guess policy wise. And so I don't know how that's going to shake things up, but it certainly seems like we would, unless that really has shifted things. And I haven't seen anything terribly negative news wise. You would think that we would bounce off this again, but again, what would trigger a huge capitulation event? I don't know, but I think you guys would probably agree we haven't seen the huge capitulation event yet. So
Government reopening, I think a lot of people expected. I put
yeah,
out a
could be.
poll a couple weeks ago. A lot of people expected we'd have a bigger pump after the government opened. It was a bit of a sell the news. I mean, we kind of broke down after the government reopened, and it wasn't quite
Yeah.
the positive catalyst that people anticipated. I think people expected a little bit of, maybe not to get to an all-time high necessarily, but they expected a bit of a pump back after the government reopened. That was good news, but we saw the opposite. We saw the price go in the other direction. So yeah, I mean, imagine if the government didn't open, like it would have been probably even worse. Like you know what I mean? Like we'd probably be in an even worse position if the vote went the other way. But there is an important earnings call today to do with NVIDIA that I think a lot of people are looking at. There's a narrative right now around this AI. Is it AI in a bubble or not? And that's kind of because that's AI is such a huge aspect to the S&P and the NASDAQ. I think the earnings call today is actually quite important because depending on how that goes, people will assess to what degree they think AI is in a bubble. And if they assess AI as not being in a bubble, I think that's really positive for all risk assets. If they assess AI as being in a bubble, and they're looking at NVIDIA as one of the major gauges of that. So that's an important earnings call today for sure. We're well into the discounted area, and I put a little note in the legend there saying when I have discount, deep value, and premium, that's not my recommendation as far as an investment. That's basically saying versus the historic data set, you could quantify this as being a discounted zone relative to that 50 quantile, which is kind of your fair value. So that's all it's saying, but it shows kind of the range of possible outcomes, right? If we were to go down to the low 50s, that's basically the lowest you kind of go on this model as far as historically related data points saying like, okay, the first quantile is in the low 50s. You can kind of see over a period of time those numbers go up. That's the long-term statistical pattern of the fits. But yeah, 36 we're getting down there. We're quite a bit lower. We've looked at this previous weeks, we're in the 40s. Yeah, now we're kind of mid 30s, and so you could say we're getting close to the point where 2/3 of the time we've been actually above this level, and so we're getting quite a bit into the blue, which is the discounted zone. So this is kind of, this is where people could start saying like, okay, there's a decent amount of value here to actually be a buyer. Obviously we could go lower, we could go into the gray band, we could go below 15, but I don't personally think that. I personally think that bottom band, that gray band, I've talked about this previous weeks, I think that's more of a black swan band, that it takes quite a strong catalyst to get us down there. I kind of think that we'll go, if we do go into a quote unquote short bear market from here or whatever, or even grind down for 6 months to a year, I kind of see us going more into the very top of the gray, or maybe just slightly into the gray. At the very bottom, I mean, it's historically a place only reserved for really, really, after really big blow off tops and then like really deep capitulations combined with like black swans, right? So
Without the blow off top, we can't have the blow off bottom, right? They come together. I agree.
The asset and the maturation of the asset can change and improve and become, adopted such that this just means it's getting closer to a globally adopted asset, right? It's well established, well enshrined. I think that, yeah, the upside here is that even if we were to have like a black swan or something close to that and return to a support, that means we're dealing with like less than a 50% drawdown, where historically we've had to do, for the last 3 or 4 cycles, it's been 80% and the 80 plus percent drawdown. So that's lowering of volatility. Can we still go up to the tops and then see an 80% drawdown? That's the thing, right? Is that I don't think that we know for sure. It's all about the long-term trend, and it's what's going to happen in the next month, what's going to happen in the next year. I don't really care, because when I see this, you're showing the lower half of the data here. Plan C is 99.71%. Statistically, this is the most reliable, trustworthy pattern that you can. This is not TA, right? This is actually rigorous sort of reliability style testing that you've done, that I've done, that others have validated. It looks kind of scary, like, gosh, 36.2 percentile. We've been riding that 50th percentile for a while, so this is kind of a scary, but This chart is not scary. This chart is nothing but bullish.
It's a conviction model. To me, this is mainly a conviction model. It's definitely not a short-term trading model. It's a conviction model, and I mean, it's factoring in the full data set, hourly data. 134,000 data points. Yeah, you mentioned the high R squared. The slope is actually going up because every day we spend above the 25th quantile. Basically, if we're below the 50th quantile, but we're above the 25th quantile, if we're between the 25th and the 50th, that actually makes the slope slightly go up a little bit. And then if we're between 1 and 25, it would pull the slope down slightly.
This is a really fun collaboration work that I did with Matthew Masinski's. He's at One Base Money on X. He has also a very prominent voice on YouTube as well. Go check his stuff out. But he sort of had this idea, and he just, I think it was over the weekend, messaged me and was like, hey, I really want to see, like, if we're just off, like, imagine somebody's off by like 20% from what the price is today. When I did this, I think the price is 94K, so it's just a few percent higher. And he's like, I just want to see, like, if we follow that trend, then after like a 10-year period, what position would it put people in, after selling? And like, let's just to sandbag it a little bit. Let's do annual withdrawals. 10%, they're taking their chips off the table. 10% of their stack they're taking off and cashing out. Maybe they're saving it, maybe they're spending it, but whatever. So I was like, this is a super interesting exercise. Let's make it a collab. So I ran the numbers on all this stuff and put the visuals together, and I added my own twist. I also, at the end, selling in 2035 in November, simulating the seller also being off by another 20%. So either selling at a 20% premium or being more unlucky and selling 20% under the median. And so this whole thing was fun to go through because at the end of the day, it kind of tells us a little bit what we already know, but it's especially true for Bitcoin because of the power law growth. Everything that you're seeing there it's the fundamental basis of the trend of Plan C's long-term trajectory there. It's so powerful, right? Because you can be super unlucky. What this is basically showing in the middle chart, there is if you were to buy the other day at 94, buy a whole Bitcoin, or no, sorry, $100,000 worth of Bitcoin at 94K, but you bought it 20% too expensive, right? Then you start following that red trend line. Even at the end of that trend line and you sell, then if you sell at the median price, then you're going to be 535,000. It's basically like I think it's a 4.4x from your initial buy-in. And that's actually that's like not including the annual withdrawals. So it's like super sandbagged, like without even taking into account what you took those 10% per year out to do with whatever. The remaining amount of your Bitcoin stack is worth that much, is worth 4.4x. So to me, that's pretty insane. And so worst case out of all of these, if you were then if you were super unlucky and you were selling at 20% cheaper than the median price in 10 years, then your stack is still worth 428,000. And you see that in the lower bar chart to the right. Sure, you can have a benefit if you somehow realize that you're buying 20% cheaper and then you sell 20% more expensive. Now your remaining stack is going to be almost basically $1 million, 964,000. Again, that's not including the chips that you took off the table along the way.
Yeah, I love this. I also love Matthew. He was on my show. Is one of the most viewed video I have. So really glad you guys have done it. Again, this shows how important it is to zoom out and stack over time, right?
Again, this is based on the best pattern we have for Bitcoin, the best mathematical pattern we have. And so assuming this continues to hold over this duration of time, it's, all signs point to Bitcoin getting more adoption. If you believe in Bitcoin long-term, getting the exact bottom of every dip is not, required to be successful. Yeah, there'll be some differences there, but it's not as dramatic as some people might think, right? The key is just getting your stack and having the conviction to hold it long term. That's basically the takeaway for me.
Oh, by the way, that was 5.4x. Sorry, not 4.4x or 5.7x. That the red line. This is I try to update this, maybe a couple times a month or more if I can. Maybe I should do it more, but this is the decay channel model. So similar to Plan C's model. And I'm showing this in linear view, fundamentally based on quantile power law for the support. That's the teal line that's underneath. That's kind of the support line. And then the top models here are based on an exponential decay of the tops. So there's a slight difference between the green and the teal dash lines. And that has to do with what the volatility decays to in the future. Basically, that gives you a little bit of like a zone there for if we were to reach the 100% level in the oscillator again. I think a lot of us thought that this was probably going to happen in 2025, but now given what we know about like like you said, their controversial statement, Mr. M, that the cycles kind of never really existed. It's about the business cycle. It's about liquidity. Like there's nothing wrong with looking forward to a delayed cycle, I guess, right? So if this pumps up to that top zone again, if sort of the trend has held up like the previous all-time highs for each cycle, then we can theoretically look forward to something between 200 and 300,000 if we shoot back up and get parabolic over the next year, which makes me pretty excited. I think it seems pretty reasonable. On the oscillator side, that's the inset plot there. This shows you as a percentage. It's kind of percentage deviation between the support line and then the top models. So 0 to 100%. And we only ever scratch 50% this time around. So, and this does look eerily similar to like the PMI, right? The things that are tracked, or kind of the copper gold ratio, actually, where things are kind of like half cocked this cycle a little bit. Like they kind of bubbled up a little bit. We didn't reach a full boil. We hit 50%, back down to 20%, and then we actually went back up to 50% again. And now we find ourselves back at the 20% level again in terms of the oscillator. So yeah, I mean, for me, it's just like, I'm buying. So this oscillator view helps me a little bit in terms of maybe how aggressively I'm stacking, but a lot of times I'm buying. So if we had all the liquidity and we had this flux of liquidity, cheap investment, and we had that kind of macro environment, I think that we would have all the fuel we need to get to a much higher high.
Thank you so much, guys. I truly enjoy our Wednesdays. Actually, I'm looking forward to them regardless of the price. And like you said, Smithy, I'm in the same park. I buy every month regardless. I don't care because we have a long-term mindset. So thank you both for being here. I always enjoy chatting with you guys.
Have a great week, guys. And yeah, these, depending on what happens in the coming weeks, these weekly calls will turn into either therapy sessions or they'll turn into to a party. So it could go either direction, but we're going to be here regardless. For people that are going to stick it out long term. I mean, we're all interested in Bitcoin. We all have a passion for Bitcoin. We all love looking at data. It's not about looking at the data to trade short term. It's about understanding what's going on and kind of assessing and kind of seeing, are we still on track for these longer term patterns, and kind of keeping our conviction up by looking at the data, right? And when you understand at least, and you can put things in perspective based on data, it helps to kind of calm the emotions. And a lot of times calming the emotions is key to not making these really bad decisions. So that's really more, at least for me, kind of the value of what I put out is just by understanding things and putting things in perspective, you can, not get too emotional and then, be more level-headed and more focused on the longer term kind of patterns. But anyways, guys, we'll be here every week and appreciate you joining us.
Awesome being with you, gentlemen. Yep.
We'll see you guys next Wednesday. Cheers.